Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep, first day of December. Can't believe that's here already. I'm Spencer Israel, joined by Dennis Dick. Joel is out for the day. We'll miss him, but he'll be back with us on Monday. A lot of news to get to today. We had some headlines yesterday. CVS and Aetna, Blue Apron with the executive shakeup there. Amazon potentially getting into the drug delivery space, but really the end of the month buying is the big trend. We'll start the show off with our guest today, Phil Bock. He's the CEO of ACSI Funds, produces some pretty interesting ETFs. So we'll talk to Phil at 8:35. Dennis, I had an interesting night. How was your night?
Uh-oh, Spencer, it's already starting bad here because I had the mute trick. I had to do that for Joel, though.
Oh, okay.
So it was one of those. Can you give us the updates just what the futures are doing this morning? Let's do that.
Yeah, okay.
We'll keep with the system because Joel usually gives the futures quotes, the oil, and he always gives that Bitcoin price there, too. So give us the updates there, and then I will tell you about my night, and you can tell me about your night.
I will give the oil. You will give the Oilers. So, all right. S&P futures are at 2650. Sorry, 20. What did I read? 2640 is where we're at the S&P futures right now. So down a little bit from the overnight high of 2658.50. Looking at gold this morning, 1279 is where we're at, thereabouts right now. A little up from the overnight low of 1273. And crude oil, we are up a hair this morning. 57.91 is where we're at. 56.82 was the low from yesterday morning. And Bitcoin, where's my Bitcoin chart? See, I hadn't even pulled up a chart of Bitcoin because I thought that was Joel's thing. So Joel's not here. Let me pull up my World Coin Index Bitcoin price and see where we're at. 90. We're still over 10. I didn't even realize that. I thought we were still under 10, but we're over 10 now.
10 comeback trail.
Yep, we're at $10,213.06.
Can't keep a good coin down.
Can't keep it down. So how was your night?
Oh, it was one of those nights, and I am like crawling today because I only got about 5 hours of sleep. And, that's actually kind of normal for me with two kids, but a little abnormal as well. And I've got this whole depression thing going on as well because, sports affect my life. And I've been saying on the show jokingly, if I didn't watch sports, I'd be a much happier person because I always cheer for the perennial losers. Anyway, so watching the Oiler game last night, Edmonton Oilers is my hockey team, and obviously I'm Canadian, so I love my hockey. They're playing the Toronto Maple Leafs, and this is like the Toronto Maple Leafs are the New York Yankees of the NHL. So this is a huge game for them. The game is in Edmonton, and literally half the fans are Leaf fans, just because Leaf fans just surround the entire world of the NHL. So they're, the Oilers are chanting, "Go, Oilers, go," and the Leaf fans are chanting, "Go, Leafs, go," and it's just a battle in the crowd. Huge game. Leafs get up early, 3-1. The Oilers come back to tie it 3-3. Then the Leafs take a late lead, 4-3. Oilers come back to tie it again, 4-4. And then with a minute left, this happens. I just posted the link in the chat if you want to watch the video. But Chris Russell, who'd had a great game, turns and he's battling with Kadri in front of the net for position, and he goes to smack the puck away from Kadri, and he slap shots it into his own net. It is an unbelievable shot. So scores on his own net with a minute to go in the game. I look at it and I was just like, this is my season in a nutshell. Oilers playing a pretty good game, coming back, coming on. Defenseman scores in his own net, and we lose again. So sports ruined my life, Spencer. Sports ruined my life.
I myself had a rather bad experience with UPS last night. I'm supposed to get a package on Wednesday, and I missed it. So I called yesterday at 9:30. I called right after the show, and I said, I'm going to pick it up today. Don't deliver it to my house. I will pick it up. When can I pick it up? They said, okay, great. Come between 8 and 9 p.m. I said, great, I'll be there. I show up at 8:45, and there was 10 other people ahead of me who also hadn't gotten their package that they were told to come between 8 and 9 p.m. And of those 10, only one of them got their package, and they said, oh, it's still on the truck. We can't find it. Come back tomorrow. They had one poor lady working working the counter, dealing with 10 angry customers, and I couldn't help but shake my head at. I ended up hanging out until 10 p.m. So I was there from 8:45 till 10 p.m. and I didn't get my package. And I
did get your package. Anyway.
How is a $105 billion company that dysfunctional? I don't know. I don't get it. But anyway,
so you're shorting UPS today.
Oh, I'm hate trading.
You're putting the anger
yeah, hate trading. Absolutely today.
You'd be shorting the all-time high because UPS was the beneficiary of all those end-of-the-month buying we saw there yesterday. And I'll tell you, huge buying balances at the close, over $3 billion to buy on the close. You saw the markets running up. You saw stocks. Check out this chart of Visa, symbol V. Stock gaps up, just like look at the intraday chart. Stock was at 111.31, gaps up on the close to 112.59. So gaps up $1.20 on the closing print. So just for fun, goes up another 1% just on the closing print. I actually threw out an order and I got short that closing print, so I'm doing pretty good on that this morning. But there was just some crazy buyers coming in at the end. They had to be in. These money managers, end of the month, we got to be in. Buy everything. Buy everything. Well, they bought everything, so they're getting punished a little bit here today because we're pulling back. But we know how this honey badger market is. Pulled back 5, 6, 7 points, and new buyers will just emerge out of the crumbles from the market. Crumbles is a joke, but anyway, so we see this market trend down here this morning. But how do you get bearish? I mean, it just seems like every time you think, okay, the bears are starting to have some life here, the bulls take the rug out from underneath of them, and that was an incredible rally there yesterday.
So is it safe to say then that we'll see the same thing again in 3.5 weeks? Or?
Who knows? Eventually there will be some type of correction. Eventually there will be some type of pullback. And there is in individual sectors. I mean, the tech stocks still don't look that great to me. So, you can look and, it's been rotation, and we talked about this yesterday, from the leaders to the laggards. Stocks like the retail, getting some love, stocks like the financials. That trade came off a little bit yesterday, though. So retail, if you look at a stock like Macy's, came significantly off of its highs. A lot of the financials, which are actually trading down here today, came off their highs as well. So you saw about midday, the trade reversed course, and some of the actual tech stocks actually started to catch some bits. Facebook, Apple both had pretty good days. So if you look, at the Qs itself too, the Qs had a pretty good day too, getting a lot of its losses back from yesterday. Everything is down here this morning. It's a little bit of a sell everything market here this morning. I'm looking at my screen with about 200 stocks on it, and there's spotty green, but it's very spotty. I mean, I see, VMware, which reported earnings, it's trading up significantly here. But for the most part, you're seeing almost all the stocks trade in the red. So a little bit of profit taking from everything yesterday because it just got overzealous. I mean, there's a little bit of a blow off top yesterday. Maybe we have a day or two where this market can calm down a bit, catch its breath before probably going higher again.
I was keeping an eye on Sears yesterday, and they slowly gave it all back.
And that's the thing. When you're buying dog retailers, and a lot of the retailers actually opened and they ran up and but we were going to say on the show, if you were coming to that retail rally now, you were late to the party. And the people who came in yesterday morning, the people who came in yesterday, 10, 11 o'clock in the morning, are being punished here today because a lot of those retailers pulled back from their highs yesterday. I think the retail topped out in the short term yesterday. I mean, Sears is a great example here, a stock that just wanted to go up because of the short interest there. But then everybody actually looked at the report and said, this thing lasts $5. It's a $4 stock. Let's sell it. So institutional money managers said, thank you very much for the 20% pop that we saw in the morning. They took it. They rang the register. They hit it down. It was trading flat within 2 hours and obviously closed down on the day. So deserved. It was a terrible quarter, but it didn't help if you were short it because you got squeezed in the morning if you were holding that into the report.
All right, so let's get to some. Actually, before we get to news, were there other stocks? You highlighted Visa, but were there other ones that really you saw just huge buying opportunity at the close?
The Visa was the one that gapped up a lot. There was a lot of stocks, though. I mean, the S&Ps themselves were running up on the close as well. Right. I mean, you can just look at the SPY chart, and it ran up, and not only that, it was running up midday as well. It was just a day where it seemed like everybody wanted to buy. And you had the reversal, like I said, come off. Some of the retailers, some of the banks actually closed down, but the tech stocks, the stocks like Amazon had a pretty good day yesterday. It got back almost $30 of its loss, of its 50-point loss from the previous day. So these buyers just seem to emerge. I mean, you have this eternal bid, it seems like, under a stock of Amazon, just because every money manager wants to own this thing. Pulls back 50 points, money managers lick their chops and they come in and they buy. And I don't know what changes that mentality. Eventually something will change it. But, until that happens, you just keep going. The trend is your friend. And, every time these things seem to give you a 5-10% pullback here, in a short period of time, it's just another opportunity because things are at all-time highs 2-3 weeks later.
Right. So
I don't know when that trend changes, but eventually it will, and buy the dip won't work. But BTFD, which is buy the blank dip, which we've joked about, and lots of people joke about that on Twitter, it just continues to work here, it seems like, in those stocks anyways. And yesterday was another example where BTFD was working.
All right, let's get to some of the news. We had a lot of individual movers yesterday. Where would you like to go? We had CVS, we had Amazon, we had Blue Apron.
Let's talk this Amazon stuff before we jump into the earnings. Multiple headlines here, really, like in the retailers and the drugs, really, for that matter, because we got the CVS Aetna thing going on too.
Yep.
Talk to me about Amazon, though, because Amazon came out, reported by CNBC just after, I'd say, 5 o'clock.
Mm-hmm.
And what did they say?
They have held preliminary talks with makers of generic drugs about a potential entry into the pharmaceutical space. It would mostly be, I think, in distribution or in drug purchasing. So that would affect stocks like McKesson and Cardinal Health and AmerisourceBergen and ABC. I think those are the ones that would be most affected. Amazon, I don't think would move. I mean, they're not moving on this, but I would really look at those 3 stocks as plays here.
And also, they were talking with Mylan, MYL,
yes,
which is getting a big pop here this morning. They were talking also with that sub of NVS,
Novartis,
which is Novartis. Yep. And Teva was getting left on this as well, just because Mylan, I noticed Teva last night was trading over $15. Got some love from Guy Adami on CNBC too, because he was saying they're talking to Mylan. Teva they might be talking with too. Not talking about, but I don't know. It wasn't really didn't feel like a merger, like they're going to come and buy Mylan Labs.
No.
It was just they were talking, maybe do some type of deal or collaboration with them. And if you look this morning, MYL, in a terrible tape here this morning, is one of those bright spots. It's trading up over $1 here in the pre-market. Teva is actually in the green by a little bit as well. But if you look at those other stocks you talked about, McKesson, let's get the beats on this. McKesson's trading down 3% here in the pre-market, trading actively in the 143 handle, giving back $5. ABC, which is AmerisourceBergen, it's not trading down as much, but it's down $1 here, so it's getting hit a little bit. And then there's Cardinal Health, and Cardinal Health hasn't traded yet, but has offered down as well. But when I think about this, the McKesson one kind of jumps out at me here, and MCK is definitely taking it on the chin from this Amazon news.
Right. And again, according to the report, it wouldn't be they wouldn't be acquiring, Mylan or Novartis. They would be working with them and distributing their buying and distributing their drugs, which is why the distributors are getting hit on that news. All right. What else we got? We got the CVS.
Somebody's asking what is happening with the IBB. That's a split. So IBB, if you look at it right now, it's trading at 105.25. And somebody, whoa, it closed at 315. What's going on? I don't know why, but I believe they split that 3-for-1. So chat just might verify that. Obviously, it looks like it's 315 was the close. You cut in by 3, you get that 105.25 adjustment. So obviously, IBB it's trading flat here right now, 105.25, because that's the close. So I'm not sure why they split. I don't know what the reasoning is behind that. Maybe they just want it lower price so everybody else can get in. Like splits are a weird thing. You used to see them years ago all the time. And now it's like the cool thing not to split your stocks. Although this is an ETF, so maybe they just wanted it, lower price, so everybody, maybe spreads get a little bit tighter and everybody trades a little bit more, get the volumes up. So, anyways, it does appear IBB had its 3-for-1 split last night. So don't panic. IBB is not down 66% here this morning. Simply split 3-for-1, and it's actually trading flat right now, which is pretty good on this down day.
All right, let's go to the CVS news from yesterday morning. That according to Dow Jones, CVS Health is nearing a deal to purchase Aetna. It could be between $200 and $205 per share.
This has been rumored forever. So now we got a price tag on it that they're putting it in $205. And if you look at Aetna blasted off yesterday on this news, you can see it on the chart when it broke, about 10:30. The stock, it looks like, it gapped up to $192 and then quickly came back in. I mean, here is a consideration. Even if you get the official announcement of a $205 deal, stock's not going there right away because there's going to be some antitrust issues here. I mean, it's not, you look at the Time Warner thing, it's not, like it's Humana and Aetna, which would totally get blocked and had already been blocked when we had Aetna trying to be acquired by, I think it was Humana, when they were going to merge together, but you've got, now a vertical merger here potentially with CVS Aetna, similar to what the Time Warner deal was with, obviously getting bought by AT&T. So I think there will be still some antitrust scrutiny. So that being said, 205 price tag comes out officially. Don't go buy a 204 because I think Risk Arbs will put a discount on this just in case the deal doesn't go through. I think if the 205 price gets officially announced, I think you see a 5 or 6 point pop in Aetna, but I don't think you see it trading up into the 200s. I think that there's just too much antitrust scrutiny that could potentially happen here.
And I'm looking at the 1 year dailies, and when's the last time it was that high? We're at all-time highs.
All of them. I mean, you can look at all these healthcare providers. Humana is right up there. Humana's been on a hell of a run. Look at it from the last 2 days. Wow. 245 to 260, just feels like overnight. Incredible moves. You can look at, there's like 5 or 6 of the big ones here. There's Humana, there's Aetna, there's WCG is another one too. WellCare Health Plans. There's, my brain's not working on this 4 hours of sleep, but there's 4 or 5 of the other ones there too, obviously, and they've all been really strong, Spencer.
All right, let's move on. I'm looking at the chat. Let's move on to earnings. We had some earnings yesterday.
BMW, this is a big one, and it's trading in the green here right now. Give us the numbers.
Yep, VMware did report yesterday after the bell. Q3 adjusted EPS $1.34 versus $1.27, so a 7-cent beat on that. Sales of $1.98 billion versus $1.986 billion, so just a hair under the estimate there. And on the conference call, they said they see their Q4 EPS coming in a penny higher than the estimate. The sales coming in just higher than the estimate as well, and the fiscal year sales guidance is a bit higher as well. So slightly higher on all 3 counts.
And the stock is trading slightly higher here in the pre-market. Not getting a huge lift, but a lift nonetheless. That's up 1.78% in the pre-market. Very choppy. I traded this one. I'm actually still got a trading position on it. I got a hedge with the DVMT, which is basically a tracking stock where we've talked about that before. But this ran up, it came down, gave it back. Now it's running up here again. It's got multiple analyst ratings. Somebody's upgrading it, somebody's downgrading it here this morning. So BMW is trying to figure out where it wants to go here. Got hit pretty hard yesterday or the day before in the little tech wreck. Really didn't bounce back that much. I'd be interested to see what happens when the real liquidity comes in.
We had a bunch more. Let's go
ahead.
5. You want to do 5?
Do 5.
We had 5 below yesterday reporting after the bell. Q3 EPS of 18 cents versus 10 cents in the same quarter last year. Sales of 257 versus $199 million again year over year. Comps were up 8.5% for the quarter. That's a year-over-year metric as well. So great improvement in Q3 year-over-year as far as their guidance goes. Their Q4 EPS guidance coming in higher than the estimate. Their sales guidance coming in higher as well. They see comps for the quarter, this current quarter, will be up 4 to 6%. Fiscal year comps will be up around 6% as well. So all in all, just a good number, a good report.
Can I just want to say, you cannot keep a good market down here. Look at this market, how resilient it is actually right now. We're already just came back 3.5 points again. This market is just the honey badger market of all markets. But let's go back and just talk 5 below on the technicals here. Stocks getting a lift. This has been one of those, all the dollar stores, and this is the $5 store. But all the dollar stores, have really been up and coming back, and a lot of them trade near all-time highs. Dollar General's just slightly off it. DLTR is at all-time highs here, and 5 below is no exception here. FIVE trading right near its all-time highs here as well. So impressive move yesterday for 5 below. Got the lift with all retail yesterday, and then sold off a bit. It's getting a lift here again, but not that much. And remember, this is one that actually has kind of been running up under the report here. So I don't think this is one that's going to blast off into orbit today. I'd keep an eye on around yesterday's high, which is 63.33. It seems to be putting a lid on it in the pre-market here. It's fairly widespread, 62.40 to 63. Very light volume, only 6,100 shares have traded. So you can easily say that this is still in the price discovery process, obviously, this morning here. But big, it's been a big move here for Five Below, and I don't know if I'm chasing it here.
Who was in the chat? Spinner with AMBA. So we'll go there. Q3 just EPS 75 cents versus a 67-cent estimate, so an 8-cent beat. Sales of $89 million, $89.1 million versus $88.97 million. So they slightly beat that number as well. Q4 sales are said to be in the range of $68 to $72 million, which is within the estimate of $70 million. So inline guidance and pretty good earnings. They beat on the EPS and they beat slightly on the sales.
It got hit the last couple of days in the tech wreck. Not as bad as some of the other stocks, though. It's kind of been holding up. You could almost argue a double bottom there from the last couple of days at 53.89 and 53.80. I will argue the double bottom as long as that level holds. And obviously, the bulls are in very much control here this morning because the stock is trading up near its highs. So just be careful because they had a double top up at 58.55 and 58.51 from 4 days ago. So if you're coming in here buying it, you're really buying at 50 cents away from resistance. I hate buying stocks at resistance. I don't mind buying them when they're breaking out. But when they're just opening up at resistance, especially, when tech's kind of turned a little sour the last couple of days, I'm kind of scared to buy AMBA up here. So, and the main reason, obviously, for that, again, is that tech has turned sour. This buy, and just saying in the chat, Spinner saying it was down 11 when I logged in. I know it was down 11 points here, and we're down like 2 points now. You just cannot keep this market down. Incredible resilience.
What about the old AMBA GoPro trade, right?
That's been dead for a while. GoPro and it used to be like Ambarella, supplies GoPro goes down, Ambarella goes down. I mean, GoPro is just in a world of hurt. AMBA is not. So AMBA its own company now. So I actually used to pair trade these two together because GoPro and AMBA, AMBA supplies a lot of the parts for the GoPro, but I think it's a smaller part of their business now. It's not as important, still a part. But GoPro has just got its own problems going on. Ambarella has actually started, to figure out its own stuff here. So, still significantly off its highs. If you want to go out to the monthlies on Ambarella, you are way off the all-time high, which is up at $129. That was back in GoPro day when GoPro was blasting off there too. But still, when you put it in perspective here, it's come back a long ways from the lows. September, we hit $40. We're up here at 57 here now. You're talking about, in 3 months, you're talking about a 45% move here. So Ambarella has performed nicely here over the course of the last 3 months.
All right. Big Lots reporting yesterday, or this morning actually, Q3 EPS of 6 cents, which is a 2-cent beat. Sales of $1.11 billion versus 1.12. They are also raising their outlook. They're raising their Q4 EPS outlook by 5 cents, and they're raising their fiscal year EPS outlook by 8 cents. So it was $4.15. Now it's $4.23 is the low end of the estimate for the fiscal year. So raising EPS outlook for the quarter and the fiscal year, and reporting a okay third quarter.
Not good enough. Bottom line, this stock has been running up, and this stock ran up $5 to the report. And like I said, retail turned yesterday. So your retail reporting today, you're not showing as much life. Even the Five Below report was pretty good. And I think if that were reported yesterday morning, when everybody had to own retailers, it'd be up $5. No pun intended. Five Below, $5. But Big Lots, you look at it trading this morning, an okay report trading down $2 here because retail kind of turned yesterday. So it's all about like what day you're reporting on. Sometimes the reports matter. They do matter to a certain extent, but a lot of times it's just sentiment towards the industry. And the retailers yesterday had their big pop off the bat, 3-day rally, and they kind of turned. And now you've got a little bit of sour taste going on in the retailers. So money managers taking that opportunity to do some selling here in BIG. If you're trading it from a technical perspective, it broke out from 56. I'd like to see what it does at 56. So if it pulls back, and Big Lots can have wild moves. You can say, oh, this is a little retailer there. This stock can move 5-10% on a report easily. I've traded it before. It can be a wild child on the report. So don't be surprised if this thing starts bouncing around quite a bit during the regular session.
All right, let's go to Ulta Beauty. Didn't Don't know anyone who still shops there. Q3 EPS $1.70 versus $1.67. Sales of 1.342 billion versus 1.34 billion. So they pretty much met the estimate on the sales, and they beat the EPS by 3 cents. Comps are up 10% for the quarter, 10.3% to be exact. Q4 sales guidance coming in line with the estimate. EPS guidance coming in lower than the estimate. Estimate was $2.84 for Q4 EPS. What they project is $2.73 to $2.78.
Not good enough. And ULTA is a stock that has been in the doghouse for a long time here now. We can go back just to, well, actually since the summer when everybody had to own it up to 314. Stocks get overzealous, they get frothy, they report a bad quarter, and they go into the doghouse. And this has been in the doghouse for the back half of 2017, obviously losing over 100 points from the highs. Come back a bit, but you're trading 211 here this morning. You're trading down. It's kind of in the middle of nowhere for me. So I'm going to say it's an SOH trade. It's a sit-on-hands trade because you're down here at 210, 211. Retailers are, they were showing a lot of life a few days ago. They're showing a little, hate here, this morning and yesterday. So I'm hands off on ULTA. I just feel like it's in the middle of nowhere. Down at 200, I think you got some support though.
All right, a couple more earnings, we might as well just keep going.
And there's a bunch of questions in the chat. The chat's buzzing here, and we haven't caught any of those questions yet because there's like some educational questions they want. So, we'll get to those in just a second. Thanks, chat, for all the great questions here. Finish off the earnings reports, and then let's go to the chat.
Just a couple more. I would say we can hit Nutanix, NTNX.
Nah,
no,
I don't want to.
You don't want Nutanix.
We're getting too small here now.
Okay, you want.
It's up $2. We'll just tell you that.
You want to zoom in?
We can talk it if you want. It is a big mover. 154,000 shares. Give me the numbers for Nutanix.
Oh, now you want Nutanix.
Do it quick.
All right.
I'll give you 20 seconds.
Nutanix, adjusted EPS 16-cent loss versus 26-cent loss estimate, beat by 10 cents. Sales of $275 versus $266 million. So they beat on the top and bottom for the for Q1. Q2 guidance coming in higher than the estimate by about 3 cents. Q2 sales guidance coming in line. So there we go.
It's at all-time highs, or at least it's at, I'm just going with the monthlies. It's at it's 52 or near its 52-week high here today. So it's not all-time high. Near a 52-week high. You got all those pesky tops right around $35. It's at 35.20, but remember, I always say resistance is resistance until it breaks it during the regular session. And I have not seen this trade in the regular session here yet. We'll start doing that after 9:30. Let's see what it does at 9:30. If this thing, for whatever reason, opens up and can't really get up over 35 in a hurry, then you worry about it. But let's see what it does at $35 during the regular session. It's trading over right now. That's good news. Needs to hold that 35 level because that would be the breakout. If it decides to turn and start trading back down below 35, you'd say this breakout could be a fake out, and that could be trouble. So it's all about 35 for the stock.
All right. Ed Parker is bringing up Overstock. That crypto stock trade is still on fire. Mara is up today. Riot's up today. OSTK is up today. All those crypto stocks.
They're starting a new fire, we should say, because they have been fire burned out really fast there in the last couple of days. I mean, Overstock got absolutely murdered here in the last 3 days, from $65 down to $45. I mean, you're talking about 20-point loss on a $65. You're talking about a 30% fall in 4 days. How it happens? These things fall from grace. Eventually, they start to find life again, though. All these other ones he talked about are very speculative plays, like Riot, Mara. They all got, they all had the ridiculous rallies up, like Riot in that pre-market that day was trading $29. And obviously, we're back down here at 14. So they've come back a long ways. I think you got some bottom fishers in here now thinking, oh, maybe it'll do the 29 run again. Typically, that doesn't happen, though. Typically, once these stocks top out, there's a lot of overhead supplies. People who bought this thing thinking, Riot, it's got blockchain in its name. It's going to be $100 stock. And they bought it up at $25. And 2 days later, it was 15. And they're kind of gagging on it now. And, so now you have overhead supply. Before you didn't. If you go back to, when the stock originally broke out from $14, $15, there's all air up there because the stock hadn't been up there in years. So now that's not the case anymore. Now there's people who have pain up there, and pain equals resistance. And that's why, even though these things gets $1 or $2 pops, I think 20, 25 is long gone. I don't see it getting back there. I mean, funny things happen. These things can get hot again, but I think you have an overhead supply issue here now. So I'm a fader of all these rallies.
All right, let's get to the question we had in the chat. I'm trying to find it now. It was about trailing stops. Can you see if you can?
All right, let's read it. So it's from Okay, read it to me.
I'm looking for it.
Aviator 1 says, is there anywhere a trailing stop sell order can be placed? Uh-oh, my chat just scrolled. I got to go back up together.
See, that's what I'm saying.
A trailing stop sell order can be placed in aftermarket, or is the market itself that restricts to limit only? Yeah, stop orders, and certain brokers might have their own inside orders here. I would say, holy cow, if you're using a broker that uses a stop order after hours, get rid of that broker. You can't have stops after hours. Liquidity is simply not there. So, maybe on a stock like Bank of America or something thick, but the slippage would be absolutely incredible for a stock. There's no such thing as like market orders after hours, at least not on any platforms I've ever used. So, because sometimes there's no market. A lot of stocks, you get these penny stocks, it'd be like 1 cent bid to $100,000 offer. There's literally no market out there. So, or there's no offers at all. There's just literally not one offer in the book. There's no market makers, that need to trade after hours. There's, some automated market makers, but nobody's got an obligation to make a market after 4 o'clock. So, you could use mental stops always. And if you got the liquidity there, you can use that. But I don't think there's any type of stop order that I've ever seen. Unless you've got a broker that's done something manually, there's really nothing coming from the exchange on that front. So stop orders in the after hours of pre-market, I would say, would be an ultimate no-no too, just because of liquidity issues. Unless you're trading like a Bank of America that's always thick, the liquidity is the issue in after hours.
So what kind of orders are you using then?
Always limit orders.
Always limit.
So put your price on, you want to come in, and buy the stock. Stock's offered, or you want to make a market. Let's say stock closed at $25. You think the S&Ps are going up. You bid 25.05, 25.10. You can use your limit order. You got to price your orders. You've talked about, and this has been a talk, and this has been a point of contention here in the market structure world for a while. They've talked about eliminating market orders altogether. Like, you have to put a price on all of your orders. Every time we have one of these flash crashes, people say you got to get rid of market orders. I think that's a mistake. I think if people want out, they've got to have market orders. I think the liquidity is there for the most part on most dark stocks during the regular session. Those Tim Melvin stocks, like trade by appointment only, never use market orders on those, because you could get done 10% higher. There's no market on it. But I don't have a problem with somebody using a market order in Bank of America. I personally never use market orders. It's like writing a blank check. And if the market moves really quickly, you might not be happy with the price you get. So I never use market orders. I don't use stop orders either, because a stop order, once triggered, becomes a market order. I just use mental stops, but I'm also physically here. I understand the use of stop orders for a retail trader or for somebody who has a day job, because they can't monitor the markets all day and they want to lock it in. So I understand the use of them there, and that's why I would still support stop orders and market orders, because not everybody can sit at their screen like I do all day. It's my full-time job. I can sit at my screen. So, and just, if you don't know what stop order is, it's just basically an order that once your price is met, so you place a stop sell order below the current price. If the price falls to that price, you will automatically sell out of your position. So basically the stop order is stopping you from having more losses in that position. It's kind of the whole point to it. So I personally don't use stops or market orders, because I'm here at my screen, and I can use mental stops, and saying if it breaks this level, I'm going to get out. But I just don't like giving that blank check. And that's what you're basically writing when you put a stop order, a market order, because the stop order becomes a market order once triggered. You're writing a blank check, say, get me done at the best available price. If the best available price is a hell of a lot lower, you might not like that price.
All right, that was a really good answer, Dennis. 833, I guess we'll do one more from the chat. I think Ed Parker was bringing up Shopify.
I've looked at Shopify in a while.
Let's take a look at Shopify. Yeah.
SHOP, great ticker symbol. Not surprising. Got hit in the tech wreck 2 days ago. Bounced back a little bit here. It's still down here this morning. S&Ps have come all the way back from their lows here overnight, because the BTFD guys are just down there. But I'd say if I'm looking at Shop, I'd watch the low from a couple days ago. That was, $100.59. Stock has to hold $100. Starts going under 100, I'm very concerned. And that goes for all the tech stocks out there. If any of them breach their lows from that tech wreck day, which was 2 days ago, I'm concerned. As long as they hold those lows, then you can start to go, if they start to approach it, maybe do some bottom fishing. But take out those lows. I always say stocks making new lows, you got to go. My point is on all these tech stocks, if they take out the lows from 2 days ago, which was a washout low, that means that they potentially are going lower.
And a good point there from the chat. I think it was Ryan Craver who was very bullish on Shopify when he was on. Not last week, but the week before that.
Ryan Craver, great follow on Twitter if you like retail stocks.
Yes, definitely. All right, 8:34 now. Let's go take a quick break and grab our only guest of the day. He's Phil Bock. He's an ETF guy, CEO of ACSI Funds. Got a couple interesting ETFs that are very interestingly constructed. So we'll talk to Phil about that and his overall views on the market. We'll be right back in a moment with Phil Bock. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick, and we're joined by Phil Bock, CEO of ACSI Funds. Phil, how's it going today?
Hi, good morning. How are you?
Doing great, doing great. It's nice, downright balmy weather this morning in the Motor City. But let's get to what you're up to right now. You've been on the show in the past. We've discussed your ETF, ACSI. I want to get one that you had mentioned when you were in our office a few weeks ago, and that is RVRS. Explain what exactly that is.
So yeah, and thanks for having me back on. Reverse cap weight ETF, RVRS. It's a first of its kind product, and what we're doing is we're taking the S&P 500 and we're giving people access to the S&P 500 constituents, but rather than weighting it by market cap like SPY or IVV, or by equal weight like you'll see in RSP, we're doing it the inverse of the market cap weight. So very simply, 1 over the market cap weight, and what you get is a portfolio where the smallest company in the S&P 500 is our top holding. The top holding in the S&P 500 would be Apple. That is our smallest holding. And what we're delivering for investors is a small cap tilt, so the small minus big play within their large cap portfolio. And you end up with a portfolio that tracks pretty closely. It tracks to the S&P 500, the normal cap weighted version. But over time, not in every market environment, over time, there tends to be a little bit of a performance bump that we get by tilting towards the smaller end of the S&P 500.
So then the top few holdings in your fund are must change pretty frequently because the S&P holdings, they go in and out, the bottom ones.
Yep, that's right. Yeah, every quarter there's a rebalance at the done by S&P. Semi-annually, there'll be what's called a reconstitution where they will take things out. There's also corporate actions in between. Still, by and large, our portfolio turnover is less than most actively managed funds. So there's a little bit more turnover than you'll get in the cap weighted version, but the cost of doing so is pretty de minimis in the overall impact to the fund.
So then, I guess what kind of market then would is best for? We're in this rip roaring bull market now, and obviously when that happens, large cap tends to run. So like when would you want to have a small cap tilt, I guess?
So it tends to outperform more often than not. It'll outperform in a value environment, and I agree. Right now, we're in a momentum and a growth environment, especially when you look at what's been going on in the FANG trade, and there seems to be no end in sight for those stocks. That's not a period. If that's your outlook, if you think that'll continue, that's not a period where reverse will always outperform the cap weighted version. But if that trade starts to turn around, or if you want to take some cash off the table in that trade and book some profit, it's a good opportunity to get into reverse cap weight. We also see that there's a very high concentration of stocks in the cap weighted version, because remember, with market cap weight, every quarter you're buying high. Every quarter when you rebalance, you have new market caps of the constituents, and the money comes in at those levels. You're always buying high by definition, which is a momentum strategy. But if you want to take some of that cash off the table, if you want to diversify and have a more well spread out basket of the S&P 500, then you can take some of the cash off of the cap weighted version, put it into this, and you get a much nicer distribution of holdings and a much more diversified total portfolio.
All right, let's talk about the other ETF that you've discussed on our show before, and that is the ACSI ETF. For listeners who weren't listening that day or whatever, explain real quick what that does.
So it's the American Customer Satisfaction Core Alpha ETF. And what we do is we have access to proprietary data on customer satisfaction. And our thesis is that data is a leading indicator to what's going on, to what we'll see translate down to balance sheets and earning surprises in the future for public companies. So we ran a hedge fund using this data for about 8 years. We've got 20 years of data that's been published in sample and distributed for other purposes. And what we found is that when we take it and apply it in a rules-based, transparent way, right now we have a long-only U.S. equity portfolio, which the ACSI, an index rather, which the ACSI ETF tracks. When we apply that, then there can be over the long term, and again, not in every year or not in every market environment, but there can be some alpha provided because we're getting in front of trends that predict where we'll see earning surprises down the road.
So consumer satisfaction in what sector though? In what industry?
We track all industries and all sectors. We don't want to be taking sector bets, so we don't want to be too heavy in, you would think of retail or maybe airlines or different industries as being very, more sensitive to changes in customer satisfaction scores. So we actually track any business that we can get a large enough sample size, which is typically businesses that are B2C and not B2B, that are business to customer businesses. But we track over 350 separate brands, which, when you kind of distill it down to public companies or, conglomerates, we've got 180 different stocks that we can use in our portfolios. Of those, we distill it down to the ones we like the best, but we have a broad, diversified portfolio. We put in sector constraints, so at the time of rebalance, we're never more than 10% over or under where the broad benchmark would be in terms of sector breakdowns, because we want to provide true alpha in a sector by sector way, and not, have our alpha, be the result of sector bets.
So then how do you determine the weighting? Like you get this proprietary data, but then how do you figure out, how to weight the fund?
So from the data, we distill down a score of what that company's customer satisfaction is. We weight within every sector, we weight the companies by that score. So we're tilting it towards the companies that are the most loved, that we're the most bullish on. But we have to do it on a sector by sector basis, because the elasticities of the different sectors to those scores is very different. There are some sectors like banking, for example, where you may have issues with your bank. You may not be happy with your bank, but you're not going to, every time you get annoyed with a banking experience, you're not going to go and switch all your auto pays and go wait in line at your bank and open up a new account. Whereas if you, go to Taco Bell and get sick that night, you're not going back to Taco Bell for a long time. And so, every sector has its own elasticities. We have to take that into account. So as such, we do our weighting on a sector by sector basis.
Do you take company reviews from individual people? Because if so, I'd like to throw my hat in the ring and hate on UPS for a minute. So any chance we can cut that from the fund?
Tell them your story.
Any chance we can cut that from the fund, Phil?
He had a bad experience at UPS last night, so he's got the hate on for him.
Oh yeah.
Okay. Well, here's an interesting thing is that there are a lot of companies that get a high ranking or a low ranking that I personally disagree with, or that our portfolio manager may disagree with. But at the end of the day, we need a large enough sample size that we can, have statistical confidence in the data. And there are times where, you look at it and it just makes sense. Yeah, Amazon's been our top rated for 12 out of the last 13 years. They've been the top rated customer satisfaction score, and they have built their business and dominated the online retail sector by being driven by the customer experience. But there are other companies that are kind of less intuitive, at least to me, that get a higher or low score that I disagree with. At the end of the day, it's a rules-based process, it's a systematic process, it's a data-driven process, and we trust the sample.
It's actually interesting because it was Amazon that I was using, but Amazon uses UPS, they use FedEx, so it's funny how that worked out for me. Amazon has a high consumer rating score. So give us a quick rundown of the other top holdings. We have Amazon. I'm sure Apple is probably in there as well, but just list a few of the top holdings.
Yeah, Amazon, Apple, in each sector, you find, like I said, there are different elasticities that yield some interesting results. So like in the auto sector, everyone is very loyal to their car brand, and every car company tends to have a higher score. So the whole scale is kind of different than there are in other places. But we're actually pretty bullish right now on eBay. Costco is a company that we like a lot. We find that Costco has a fiercely loyal customer base, and their stock dipped earlier this year because they raised their membership price by $5. People thought it would have an impact. We could see in the numbers that there was no way that would have any impact at all, that their customers were extremely loyal to Costco, and sure enough, the stock has come roaring back. We think that now that they, it's not only the place you go to buy 8,000 cans of tomato sauce, but now they have electronics and jewelry. We think they're going to have a very strong holiday season right now. So Costco's a stock that we like quite a bit.
It's a very interesting point you're making there, because, obviously the reason that Costco really sold off was because Amazon bought Whole Foods, and they're like, oh, Amazon's coming to their space. Costco's going to lose all this business to the Amazon Whole Foods. And they hit the stock down 20 points, I think, that day, which, and you're saying, looking at your data, you would say that's probably very overdone because of the loyalty that the Costco consumer has to their company.
That's exactly right. And it's in stark contrast to Walmart. So Walmart, they've been out over the last week or two talking about how they're in fact cheaper now than Amazon, and trying to trying to get some press that way. But the fact is that they're cheap because they have to. Our data shows that people shop at Amazon, at Walmart because they have to. They shop at Amazon because they want to. So having the lowest prices is not necessarily a good thing. It means that they have the lowest margins. It means that they have no pricing power. Ultimately, if you're invested in the stock, you want them to be able to upcharge. You want them to be able to charge a premium, at least at a certain point in the future. Amazon can do that here and there. Costco can do that here or there, as long as they're not, threatening the, the general opinion that you can shop there without having to worry about every item, that you're going to get a decent deal. Walmart can't do that. Walmart cannot get away with upcharging anything. They will, pretty quickly lose the customers that they have.
Phil Bock has been on the line with us. He's the CEO of ACSI Funds. Phil, thanks so much for joining us today. Talk to you again soon. If we don't talk to you before the end of the new year, have a great holiday.
You too. Thank you very much.
All right. 8:49 now, 8:50. Dennis, you want to cover some imbalances? Do you want to do some ratings?
There's all kinds of places we can go. The ratings land is pretty quiet. Why don't you do ratings? Is there anything really jumping out and, getting you all excited here this morning? The analysts are typically quieter in December. A lot of them are taking more time off. So it's very typical that ratings will start to get slower as we approach the Christmas season.
Nothing really gets me too excited.
Fridays are always slow too because
Mizuho upgrading PCG. That's not really that interesting. I'm sorry. Downgrade.
I want to talk about PCG because this obviously got hit on all the fires, right? And they were saying they might have some liability here. And if you look, this is a utility stock that typically doesn't move at all. And if you look back to October, annihilated. It goes from $70 down to $50 in 3 days. That was capitulation. It obviously bounced from there, but it's just kind of meandering here. I'm interested. This time I rate a 3.93% dividend. Around 50 would probably have a 4% dividend here. I'm interested in this one. It gets downgraded here at $50. I think I might actually even throw this one in my investment portfolio as long-term, because even though this might be some liability there, I'm not sure this is going to be, a long-term thing that's going to really, keep PCG down in the gutter forever. And you know how in my investment portfolio, I like to, buy when there's a little bit of blood on the water there. And PCG definitely has some blood on the water because it's still 16 points off its high from a month and a half ago.
A couple other ones that jump out to me. Priceline getting downgraded this morning from buy to hold at Argus. Citigroup downgrading Regeneron, buy to neutral. Goldman Sachs downgrading CMI, same thing, buy to neutral. Those are the only real big ones. I don't really see any upgrades that strike my fancy this morning. Anything else that you saw?
Pretty quiet in the ratings front here. Let's go to the imbalances and take a look. GE, which just cannot get some life, actually sell imbalance here. So our buy imbalance guy's given up here, it looks like. And they started 174,000 shares to sell in GE. I'm going to argue they put in a double top the last couple of days. And I think the path of least resistance, especially when we're coming to tax law season, is now down for GE. So I'm concerned on the GE. Still holding my invest portfolio, but as a trade, I think this is a short. And I think if it takes out the 1860 high, so you have defined risk from the short side. I think it takes out the 1860 high. That's where, I'd maybe, say, okay, I'm going to cover the short, but as long as that 1860 holds, I think this could start to, go see those lows again that we saw back, we put the double bottom in right around 1750. I think another 1750 test is in the cards for GE. Alibaba, 52,000 to buy, although it's trading down a buck. A lot of tech stocks are still trading down here this morning. Twitter, 43,000 to sell. Twitter has been hit in the tech wreck just like a lot of the other stocks there. Square is 39,000 to buy. We haven't talked about Square on the show yet. It's a stock we talk about every day. Volatility, at least a little bit less yesterday. Starting to come in and only had a $2 range yesterday, which is small for Square, considering the previous day had a 6-point range for a $40 stock. So Square is calming down a little bit here. Not much happening this morning, though, from imbalance land. 79,000 shares to sell in Snap, SNAP. Pfizer, 126,000 to sell in Pfizer. That's of significance there. ExxonMobil, also 59,000 to sell. Ford, 264,000 to sell. So there's a few sell imbalances here this morning. It's still early here yet, I would say, but you got a few money managers that are saying, yeah, from yesterday, maybe we'll take a little bit of profits. And it's not surprising. We started to get some life back. Then after 8:30, we started to dip back down again. And I think some of these sell imbalances that I'm seeing come in, obviously that information is published at 8:30, probably putting a little bit of pressure on the futures.
So what's going to be your overall theme for the day that you're watching?
It's a tricky theme. BTFD has always been the theme. We joked about it and we came all the way back to almost flat. Now we're starting to sell off here a little bit again. I think you had a little bit of too much excitement yesterday, buying everything or the day before, with all these retail stocks popping. I think the retail little run up there that we had, look at a stock like Macy's went from 21 to 25 in 3 days. I think that little bubble, called a little mini bubble, burst yesterday. And I think, now if I see retail stocks popping, I think I'm looking at those old highs, the highs from yesterday, as potential short, like spots to maybe initiate a short. Kohl's, if I'm looking at that, I'd say if it got up anywhere in the 49 handle, I think you're going to have resistance up there now. Nordstrom, if it got anywhere near, because they had a reversal day yesterday, got anywhere in the higher 46s, I think you're going to have, some pressure up there. Macy's, same thing. It's anywhere near, the upper 24s, got a 24.90 yesterday. I think you're going to have selling pressure in that as well. So I think you could see some follow through in retail. So I'm hoping for a little bit of an early bounce, maybe, as people say, oh, retail, they're late to the party. But I think if I'm coming in here retail, I'm actually shorting retail today.
What about,
on a
what?
On a pop, though. I want the retail to pop if I'm going to short it.
What about, we haven't really talked Bitcoin today. I saw this headline from where I see it.
It's been a good show, Spencer.
It's been a good show. No, I saw a headline from Reuters that Goldman Sachs is exploring ways to get their clients exposure to Bitcoin. Which that's fun.
Everyone seems to be trying to get exposure to Bitcoin in some way or form, and obviously, we know anything to do with Bitcoin here has been hot. I don't know, like, is Goldman Sachs going to move off of, potentially going to get into Bitcoin? I don't think so. I mean, some of these smaller companies move, but this Goldman Sachs is moving around whenever, whatever the TLT. The banks are down this morning because the TLT is up significantly this morning. Banks are probably going to stay a little bit weak as long as the TLT is that strong. I don't think there's a Bitcoin trade in Goldman Sachs, if that's what you're asking. But, it just shows that, everybody is, interested in this. You got the futures are coming, it's a talk. Everybody, you just walk in, people know I know stock market a little bit. When, I'm here or I'm there, they ask a question. Half the people, I know the question coming at me, it's going to be about Bitcoin. So I don't know what that means. Typically, it means that we're closer to a top than we are to, a good buying opportunity when everybody is talking about it. But that being said, Bitcoin has just been so resilient. And it's difficult to short. So, this is just not an easy path to short it. There will be, though, once the futures come, and that's going to be interesting.
So half the questions you get are about Bitcoin. The other half are about the Dow.
Everything.
Right?
Oh, the other half about what else?
About the Dow.
And I would say the other half are just about anything else.
Okay,
so half is
fine.
Bitcoin, half is everything else.
All right.
Bitcoin, if I look at my Twitter stream, look at your Twitter stream. Like if you have, a bunch of stock people on your Twitter, half of the tweets out there are Bitcoin. If you mute Bitcoin, your Twitter stream's dead. There's nothing going on. It's crazy. Well, it's absolutely crazy. How much everybody's talking about Bitcoin.
Well, the people that I follow it's all like sarcastic Bitcoin tweeting, like Josh Brown. But someone pointing out in the chat, we didn't hit on watching casino names this morning. Macau revenue up 22% year over year for the month of November. So watching casino names, Win, LVS. What's the other one there? MGM.
Remember, MGM doesn't have as much exposure over in Macau, so it doesn't move nearly as much. But Win, direct exposure, Las Vegas Sands as well, LVS. So keep an eye on those. WYN catching a nice little bid this morning on a tape that's not that great. It's up $1.30. MGM, remember, not as much exposure, so it's not up.
All right. Was there anything else that we missed? Any questions from the chat that we didn't get to, or anything you want to hit? Because I think I covered everything on my list.
I covered a lot here in the time. That
one more.
Here we got 2 minutes.
One more. I wanted to ask you about Blue Apron.
Oh man. Yeah. So give us the news. Apron with the big pop. Look how much it's up. It's up 7%. It's a huge move, but it's a $3 stock, so it's really up only 20 cents.
I didn't realize. Anyway. I think this is a desperate move because to me this is.
What is the move? I did see the headline go by, but I didn't even have I didn't even bother to read it. That's how much I care about Blue Apron.
To me,
I saw something go by on my timeline.
So the co-founder is stepping down from his role as CEO, and he's moving to the chairman of the board. So they got a new CEO. The co-founder is out as CEO, and a new CEO. The guy who was the CFO is now the CEO. And I think, it's up whatever it's up today. But that's a desperate move. If you're out at CEO, 5 months after the IPO, that's not great.
I am just, with Bitcoin or with Blue Apron here. This is a stock. It's been clinging to support. It's getting a little bit of life here. But you want to talk about overhead supply? There's overhead supply everywhere in Apron because everybody who's ever bought this stock is down in it. So it's tough. Even if it gets a pop, even if it gets a 10, 15% pop or 20% pop, you look at it a few days later and it seems to be right back down. So we've had these pops before. It's hard to chase Blue Apron on any type of a pop, and so they can be a little short squeeze, can be a nice little bounce. Everything's got tradable bounces. I mean, if you are trading from the long side, where your out is. Stock starts trading down below the $2.94 low. You got to get out, in my opinion. You don't want this stock is making new lows, but it's putting a little bottom here at $3. So you do have a tradable bottom, but hard to get excited about this $3 stock. That was a $5 stock a month ago. That was a $6 stock 2 months ago. That was a $7 stock 3 months ago. That when it IPO'd, it was a $10 stock. It's just been an epic disaster. So I'm not getting on the Blue Apron bandwagon here whatsoever. But you got a tradable bottom if you really, want to try to trade off $3.
The only thing I remember about Blue Apron, the IPO, on the IPO day, the opening was delayed like a half hour or like an hour or something, and they had
buyers
and and they had the CEO on CNBC, it's supposed to be like a big celebratory interview, and it was just incredibly awkward, and he was forced to defend the company because there was immediate selling pressure, which was funny. Anyway, okay, 9 o'clock now. That's it for us. That's it for our show today, and that's it for us for the week. So hope you enjoyed this week's worth of shows. Joel will be back with us on Monday. If you want to catch any show again from ever in our archives, you can go to our podcast on iTunes, SoundCloud, and Stitcher, or go to youtube.com/Benzinga TV for the last year's worth of shows. Thanks to everyone in our chat at premarket.benzinga.com. Thanks to everyone who listened on YouTube as well. Thanks to our guest, Phil Bock. And we'll be back with you folks on Monday. So have a good rest of your day and have a good weekend, and good luck out there.